Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hey everyone, Brian Hayes here with Zacks Investment Research. Hope you all enjoyed the Memorial Day weekend, and welcome back to our top stock picks of the week. This week, I'm joined by my colleague Ben Rains. We have two exciting picks for you, so let's jump right in. So let's start with gold. A lot of people are talking about the recent breakout in gold prices, but consider this. Back in 2011, so 13 years ago, gold traded at a high of about $1,900 an ounce. The shiny metal went through this massive, nearly decade-long consolidation period. We saw a false breakout in 2020, but now we've finally taken out that $2,000 level and gold is climbing higher, currently above $2,300 an ounce. We've all heard the phrase, the wider the base, the higher the space, and this move in gold looks like the real deal. We're also starting to see at least some signs of a weakening economy with jobs creation coming in light recently, along with a slightly higher unemployment rate in April. Consumers halted spending during the month as we saw retail sales come in flat, which was well below the median expectation of a 0.6% gain. This all bodes well for the Fed cutting rates this year, which will exert downward pressure on the US dollar. As the dollar and gold have an inverse relationship, this recent breakout in gold may be just getting started. My top pick this week is a gold producer with mining operations in Canada, Mexico, and Finland. They also conduct exploration activities in Europe, Latin America, and the United States. This company is a Zacks ranked number 1 strong buy. I'm referring to Agnico Eagle Mines, ticker symbol AEM. The company's merger with Kirkland Gold established Agnico Eagle as the industry's highest quality senior gold producer. It is projected to have the lowest unit costs, highest margins, and most favorable risk profile. Agnico Eagle boasts a strong set of financial resources and a durable pipeline of projects. Let's take a bit more of an in-depth look at some fundamentals for Agnico Eagle Mines. Digging a bit deeper, the Toronto, Canada-based gold producer is part of the Zacks Mining Gold Industry Group, which is currently ranked in the top 6% out of approximately 250 industries. Because it is ranked in the top half of all Zacks ranked industry groups, we expect this group to outperform the market over the next 3 to 6 months. Quantitative research studies suggest about half of a stock's future price appreciation is due to its industry grouping. In fact, the top 50% of Zacks ranked industries outperforms the bottom 50% by a factor of more than 2 to 1. By targeting stocks contained within leading industry groups, we can dramatically improve our odds of success. Note that this industry has really caught fire in the last 3 months, returning nearly 31%, outpacing the S&P 500's gain by a wide margin. We can also see that stocks in this group are relatively undervalued and are also expected to experience above average projected earnings growth. This serves as another confirmation signal that this group is a great place to be. Moving to our snapshot page, we can see that AEM is a Zacks ranked number 1 strong buy. The company has beaten earnings estimates in each of the last 9 quarters, and the stock price is reflecting this bullish theme. Agnico Eagle has delivered a trailing 4-quarter average earnings surprise of 16.48%. This is exactly what we want to see, as it gives investors confidence that the bullish run can be sustained. The stock is displaying strong momentum, hitting a series of 52-week highs this year. Only stocks in very powerful uptrends are able to make this type of move and experience such massive outperformance. Looking at the current fiscal year, analysts covering AEM are in agreement and have been raising their earnings estimates. 2024 estimates have been increased by 38.26% in the past 60 days. The Zacks consensus estimate now stands at $3.18 a share, reflecting potential growth of nearly 43% relative to the prior year. Revenues are anticipated to grow 10% to $7.28 billion. These are exactly the types of trends we want to look for when narrowing down our list of potential stocks. So Agnico Eagle Mine's ticker symbol AEM is my top pick of the week. The company is showing strong growth metrics and should continue to benefit from the recent breakout in gold. I see more upside ahead for this stock. That's it for me, and thanks for watching. Next up, Ben will share with you his other top pick of the week.
Thanks, Brian. Hello, everybody. Ben Rains here with my top stock pick of the week at Zacks. Today I'm looking at Netflix, but trades on the ticker NFLX. Netflix transformed the entire entertainment industry really forever, and it's remained on top of the streaming pile even as Disney, Amazon, Apple, and countless others pour money into streaming entertainment. Netflix has thrived given its head start in the industry, mixed with its growing original content across movies, TV shows, and more. And it's also getting into live sports and other efforts that are helping it grow in the new age of entertainment. The stock is now on the cusp of breaking out to all-time highs, having soared over 200% in the last 2 years off those lows. Netflix transformed back into a Wall Street darling by proving that it can thrive in that crowded space, as I mentioned at the top, and addressing some other major concerns. Its new low-priced ad-supported tier is helping it expand its reach once again, and its crackdown on excessive amount of account sharing is helping drive sales and earnings growth as well. So let's go over to Zacks.com and ZRS to take a look at some more of Netflix's fundamentals and growth outlook. So we're going to go first to Netflix, just its Zacks.com page. And quickly before we jump into this, I just want to mention that the stock fell after its last earnings report, driven by a surprise news that it was going to stop reporting its subscriber data starting next year, which means that they're going to focus more and more heavily on the bottom line and its ability to generate revenue growth once again, which is a good sign since it had slowed down recently in the last several years. So looking at the growth outlook for Netflix, we're calling for about 15% revenue growth from roughly $34 billion all the way up to nearly $39 billion, and then another 12% growth next year to get up to about $43.4 billion on the top line. And just for reference, last year in 2023 did about 7% growth and about 7% growth in 2022, which were those two slowdown years where the stock was falling as well. So it's good to see Netflix being able to get back to that growth for all the reasons we mentioned right off the top. And then on the bottom line, another strong showing. So we're calling for 52% growth in the bottom line to go from 12 cents or $12 per share roughly all the way up to $18+ per share. And then another 21% growth next year. So really staggering bottom line growth for Netflix going forward. And then its earnings estimate revisions are trending heavily in the right direction. So we can look at that too on a longer term scale. So we can go over, take a look at estimates for 2024 and 2025, and we can see that they're up 26% over the last year for 2024 for Netflix, and then 25% over the last year for 2025. So really trending in the right direction. And then let's take a look at the performance for Netflix. So we can see this is over the last 5 years. The stock has outpaced the consumer discretionary market, and then we can go over to a different sector just to put in the Zacks tech sector here, just for more reference. It's in the consumer discretionary market, but I see it more as a tech stock. So we can see it's lagged behind that tech sector over the last 5 years, given that big downturn. But if we go over the last 15, we can see that Netflix has been on a staggering run, up over 11,000%, blowing away the tech sector. So we can also go over that over the last 3 years, and we can see the stock bottomed here roughly around the second quarter of 2022. So if we go just over the last 2 years, we can see Netflix is now up about 232%. It fell after that last quarter, but it found support at some key moving averages. So we'll take a look here as well to give a sense of its technical level. So let's go back to a 10-year time frame, and we can see that the stock found support right at that 21-week moving average after that big downturn following its Q1 release, when it was trying to break above to those all-time highs. So I'll draw a little trend line here, and we can see that it's trying to break above to new all-time highs, and hopefully in the next several weeks or several months, it can finally break above to that level. So we can then go to a three-year frame right here to get a sense that it was getting closer and closer. And so we're now within about 5% or so of getting to those all-time highs for Netflix, and that hopefully can break out well above that. And then we can go over and take a look at some valuation levels as well, which is really attractive for Netflix. So let's go to a 5-year time frame. The 10 years is going to look a little strange that I have here because it was trading at one point well above 100 times forward earnings, and now we see it's trading around 32.6 times forward earnings. Overall, Netflix is trading around 5% below its 2021 peaks, and it appears to be a winning long-term investment as it remains one of the undisputed champions of all of entertainment, and is trading at a roughly 95% discount to its all-time highs in terms of forward earnings at 32.4 times forward 12-month earnings, and roughly 60% below its median over the last 10 years. So really, it's looking like a strong value play as well. So that does it for me and Brian and this episode of Top Stock Picks here at Zacks. Make sure to check out our Zacks.com/promo page for a look at some of our services, portfolios, and more.